All righty, good evening, everyone. Welcome to the Hurley Investments Market View Commentary for Monday, the 7th of October. Last week, I'm starting to do these Y chart recaps. Last week, the market sold off early in the week. Despite rallying on Thursday and Friday, it still ended up lower. The S&P 500 was down 0.33%. The Dow Jones lost 0.92%. And then NASDAQ actually added 0.54. Technology climbed to 1.08, and healthcare added 0.8 to lead all sectors. And energy's 3.77 drop dragged the market economy. Internationally developed markets went down 1.23, and emerging markets dipped 0.41. Is anyone shocked that energy is down right now? Is there any shock to anyone that energy is down right now? I see a couple of no's come in. So obviously not. Usually you cycle out of oil and you're going to do natural gas. You're going to you're going to see a rotation within the energy sector that you just don't have the typical gains at the end of the year because it's more towards heating homes versus transportation. Two very interesting comments just came in. One said disappointed, not shocked. The other one said, of course not. With the cool winters, people don't travel as much. I would say cold winters or snowy winters. But yes, I agree with both of those comments. So it shouldn't be a big surprise. What is a big surprise, and where I added it here, the end of the week rally was due in part to the changing of tides from the CME target rate probability tool from a week ago. 1 week ago, the tracker gave a 50% chance the Fed would lower rates in October 30th FOMC meeting. There's now a nearly 82% chance that rates will be cut based on movements in option demands and prices. So let's talk about the markets this week. What do you think? Are we still headline driven? What do you think is going to move our markets this week? I'm going to let you do some thinking on your own. What's going to move our markets this week? Maud, I like it. China trade talks that start on Thursday. So, really quickly, China deal getting done this week? Yeah, not only no, but hell no. In fact, if you go to CNBC, and I hate giving him credit, but if you go to CNBC and you go to what's his name? Kramer gives a good recap today of the 7 things that we want done in our trade deal. And with all of that said, man, we are so far from it that obviously there's going to be no deal. But the key word is that we're making progress. If you hear that we're going to make progress, things are going to move. If you hear progress is on board, things are going to be moving. And that's where you're going to be okay. That's where any good comments on our China deal is going to be helpful. But obviously, we're not going to get a China deal this year. We're just not. Too much has to be done. I do think we could see it at the beginning of the first quarter, because when that comes to play, that's going to be Trump's last ditch effort to get a mini China deal done, just to get something before his election. You can't be electing to be a president and getting your China stuff done really April, May, June, July, August, September, October. You need those 6 months for your election. It's a first quarter and it'll be done. It'll be basically terminated. I saw a couple of the comments coming in. It will not be earnings. Iran was mentioned, but Syria was also mentioned. I don't think Syria is part of this right now either. The repo, I received some information from a student on the repos. I'll be honest with you there. I just don't see the repos being part of something that truly affects our economy. So I'll be honest with you, I just don't see it. I see that there's can extend credit, and I do see where we can look at it in that regard, but I don't see the high amount of repossessions as something like the banks that moved us before. And I guess it can affect the bond markets. I personally just don't see it. I don't see it. That's the easiest way I can say it. I don't see it. So that doesn't mean that there isn't that risk out there. It literally just means I don't see it. I can't see how the repossession markets of automobiles affects the bond market. I'm just not seeing it. So take it for what it's worth. Doesn't mean that I'm right, but it is going to be important to see. Impeachments. I can't believe we're having this talk, but impeachment of the president with a second whistleblower. What a joke. But that's just my opinion. I do think it's something that you need to consider. As much as I disagree with it, I think that's where we're at. Two comments I'm going to make that actually come from two different individuals. I think China thinks we're weak right now, and they're in the catbird's seat, which I would agree. Those that understand, I think they see an opportunity to pounce. But I don't think, I don't think we're as weak as China thinks. But I do think we need to take a little bit of what they could do to us into consideration. And the reality is, if they do wait us out and Trump gets elected again, boy, is he going to put the screws to him. I think China's going to come around to think it's better to do a deal or a mini deal and then see what happens, where if the Democrats get in, they can possibly reverse it. All right. How I'm looking at the markets right now, is that there is a lot of pent up risk. Now, I think it's market risk. And I don't necessarily think there are individual stocks or sectors at risk. I think we need a 10% pullback. I think we went through 20 and we bounced right back from it. But I'm not sure I see it in this year. And the reason I don't see it in this year is because of the stocks that we trade. With that said, here's the key to what we're doing. And I think it's hilarious. Why do we protect? Why do we add shares? Why do we use options to make something up to the downside? My opinion, really simple. Because if you just sit on the market, really we're still not above where we were in the year 2000. But so you don't end up looking like this. That is the position that I think a lot of people are in. Me trying to make it to retirement. Staying out of the market for 5, 6, 7 years from the 2000 crash, getting in, having the 2008 crash, staying out till last year, the year before, volume seemed to pick up again. That is why we do what we do. If I was to bring it out in a chart, just to give you an idea of what I'm doing. How am I going to do this? What if I went to I wonder if I can get it. Hold on one second. Going from all data, that's 1600, going all the way across. 19 years later, we're still not up to 3200. If I can give you the biggest reason why people honestly feel like this, comes down to at that 1600-ish level, we still can't double in a 19-year period. We can't. We're in trouble. Which is funny because can someone please tell me what is the historical average? What is that historical average that people keep talking about on the S&P 500? Someone tell me, what's the historical average? Just meaning, hey, ever so many years, blah, 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 blah. I've said it numerous times, and this goes to back to like 1951. What is the historical average of the S&P 500? %. Mod, I love it. Historical average is 7.75%, which means if I take $100, or dollars times 1.0775 comes 107 times 1.0775, 116.0775. Our third year, 125, 1.0775. Our fourth year, 134, 1.0775. Our fifth year, 145.0775. So it's really about 7.5 years, right? How am I going to do this? Call average of 7.75. And I'm going to quote this. Average return means that almost every 7.5 years you double your money. So can someone please tell me, looking at that chart, have we doubled our money? Have we doubled our money in 7.75% years on the S&P 500, which is the benchmark? Thank you. I had 2, not even close, and 1, hell no. Did we come anywhere close? There you guys go. Now you can see the chart. In fact, you guys didn't see those pictures, did you? I was frozen there. My screen was frozen. So part of me is talking to myself here. Now you can see. If you guys don't see my screen moving, you got to type something in and let me know. Looking at our S&P 500 chart from 2000 till now, we have not doubled on the S&P 500. But we are nowhere close to doubling our money in the last, well, we're almost close to doubling our money in the last 20 years, not 7.75%. So really quickly, how I'm getting that, if you have $100 and you multiply it by itself plus your growth of 775, so you just take your $100 and you multiply it times 1.0775. Obviously, the first year, your $100 turns into 107.75. You then take that 107.75 and you multiply it one more time. And I'm going to do it for simplicity. Same amount. Now you have roughly $116.10. And if you continue to do this on through, at that 7.5 year, at 8 years, it's over it. But as you work through all of these numbers, you come out with a doubling of your money. And you think basically that you're going to double your money in roughly 7.75 years, or most people will tell you in 7 years. So there's your first, second, and third year. So that's where I came out with this dollar figure here on, hey, you're doubling your money. If you guys can bear with me just a second, I will go ahead and I will complete these numbers so that you guys can see the numbers. And if I can go ahead and ask you all a question, does the market average 7.75, excuse me, is it a linear return of 7.75% every year? Of course it's not. I like both of those answers. One said not a chance and one said in your dreams. So let me go ahead and just keep going here. Times 1.0775. We're getting closer. We're getting closer. So that's 1, 2, 3, 4, 5, 6 years. We've got 2 more to go. And we should then be come on, Hurley. Come on, Hurley. Six, 3. And I need to put my times in there. I've actually been finding out that it's not quite even under this period of time either. $181.70, and it's probably right here. 181.70 times 1.0775 is going to equal that 190 times 1.198. 195.78. Still not quite there. 1, 2, 3, 4, 5, 6, 7, 8, 9 years. So let's make sure I haven't missed anything that I set up here for you guys. Not really. China talks. What do you protect? We had shares. All right. So if you ask me where I'm going to say we're going to end up here, where are we going to end up our markets this week? I'm going to say up based on China deal progression. And I think Trump's going to have to say something in there, period. I don't think he can't not say something. With that said, taking a quick peek at our, let's let these load up. Come on, come on, come on, come on. Looking at our Dow Industrial chart, kind of looks a little scary. Today we couldn't get above our median line. Finished, close 7-8, finished just below the 50-day simple moving average. We have a pivot point that it went up to and bounced off of. We do have a pivot point support a couple hundred points down below. For all intents and purposes, I would say that our Dow Jones Industrial Average is bearish. With that said, and for that reason, you probably should have protection on just about all of your positions. I'm going to talk about that in a quick second because today I took some protection off of a single position. And I'm going to be honest with you, I hope I'm not wrong. If we take a peek here, everything looks exactly the same, 29.38 and it's 29.40.6. We could not break above our 50-day simple moving average today. We also still have that pivot point. Scary looking chart. It's a crappy week to have to wait through to get through earnings. Plain and simple. And if we look at the NASDAQ, give me a second to get that one up for you. Come on, load all my pictures. Almost exactly, except for the fact, what do you see on our NASDAQ chart? And I'll circle it for you. Yep, a doji. Two up days and we have a doji. Not only that, but it hit the 50-day and came right back down today. Definitely bearish and bearish more so on the NASDAQ than we are on the S&P 500 or the Dow. Kevin, if we're bearish, why are you still planning on 1.25% return for October? I'm going to go to earnings. This week, there aren't very many earnings. Domino Pizza, Delta Airlines, and Fastener on Friday. Consumer credit was out today. I missed what the consumer credit said. Came out this afternoon. I got pulled away this afternoon. So let's take a quick look at our consumer credit. I usually write it down on my folder. Actual came in at 17.9 billion. 17.9 billion. That's only 3 billion or 20% more than the forecast from briefing. And wow, 13.3, 4.6, it's almost 35% higher than the consensus. I like it. Why would I say I like it? Why would I be saying I like to see consumer credit where it's at? There's a particular reason for it. Why would I like to see where consumer credit's at? And yes, I know someone's going to say it, and there you go. Visa. I saw about 4 of you just type in Visa. I'm a Visa lover. I'm an Apple lover. People will go into credit for their Apple phones, right? So yes, it's Visa, but I was going to say if it wasn't for Visa, because Visa was still down $1.08 today. Why do I like seeing that consumer credit? There you go. Bingo. GDP. People are still buying crap, putting it on a credit. Moves the economy just came in. A second increases GDP, consumer spending. All of those correct. GDP, which tells me, my opinion only, with such great employment numbers, only 3.5 people are there making money. Yes, I know their biggest fear is losing their job. And of course, they probably pulled all of the General Motors people who are fighting their strike right now. Consumer credit, I think, moves ourselves higher, moves our economy higher for this fourth quarter. I think some of the icing on the cake will be a rate hike. I don't think our hike's going to come in October. I think it'll come in November. I could be wrong. But if I'm wrong, that's just more juice to the economy to push it forward. Internationally, we have China's PSM services that come in tomorrow morning. China market reopens tomorrow. We also have China trade talks that start on Thursday. Key mover for us, FOMC minutes. That could move the market Wednesday, and that will come out at 12 noon, which means plan on the market being flat or anything that happens Wednesday morning. You don't worry about it until we get to the FOMC minutes and we see if there's a change in the language. How am I looking to trade? A lot of people ask me, Kevin, you've kind of set this up. I want to do it myself. It's really pretty simple. All you have to do, for me at least, is I just take a peek and I have found E-Trade to be pretty accurate. I go to Facebook and I just go to a quote, and Facebook is confirmed on the 30th after the market closes, according to E-Trade. And so I set up my list. I have not updated this, but I just go through and I check for Apple confirmed on the 30th. That does kind of surprise me. After the market close, and literally I just go back and forth and I fill in my chart. Normally though, anything that's anything like Baidu, I do confirm Baidu, or anything that it has something presence overseas, I will confirm that with their website. CVX01, that is now confirmed before the market opens. And this is literally how I go through and I keep my list up to date, and how I stay in touch with my my stocks. I'm going to go ahead and finish these up since I'm relatively close. That's still estimated. Marvel is probably still estimated. Target is 11:12 before the market opens, and ExxonMobil 11:1 before the market opens. And I'm going to stick one more in here because people have been talking about it. Verizon. Wouldn't expect good things out of Verizon. 10:25 before the market opens. and Alcoa starts on the 16th. So that's how easy it is for me. Even when Baidu has their announcement, I then go to the Baidu site and I verify it. But for the most part, I found these to be extremely accurate, except for Ford looks wrong. Ford should be 1023. Make sure I don't put something in there wrong, huh? $10.30. All right. So there we go. That is not all of my watch list. This is the core and a couple outsiders that I pay attention to. Do you mean rate cut? Maud, I mean rate cut. Yes, I would not expect a rate cut in October. I think it'd be in November. But we do have the minutes looking for language that's coming up this week. So if I misspoke, Maud, yes, I am looking for a rate cut, most likely in November. I'm not sure I would expect one here at the end of October. I'll talk about that in a second, APD. I found this from Ian Wyatt. I thought it was pretty hilarious. Why day trading sucks. It's I'm sure there are links in there to doing other things, but yes, I just wanted to stick it in here because here this guy talks about how day trading sucks, and I absolutely thought it was hilarious. I thought it was absolutely hilarious. His reasons why: capital intensive, Eastern Standard Time, difficult to win against the algorithms now. Absolutely hilarious how he's peddling his crap, but hilarious to read why day trading sucks. Whenever the future holds, stocks should not price in for a recession. Very interesting article that I'd agree with. A recession would seriously damage our market with an inverted yield curve. And I think that's all I have. So question-wise, someone came up with a question, arrived maybe a little late. What do I think about the commissions? What do you think about the commissions revolution in placing trades? So here's what I'm going to say. I like the fact that it's cheaper, but when you get something for nothing, I've seen some horrible mistakes occur where orders of things I tried to put in weren't even filled on the correct stock. I think this is a good idea right now where they're still making money because they can lend money to banks and get more money than their commissions probably. It's not that I like paying for things, but when you're getting something for nothing, they're not going to put the resources to it like they've done before, and it's going to be a joke. There's going to be an issue. There's going to be problems with it. And I just don't see, for $5, I thought it was fine. They're raising for us, they're raising the options contract, they're raising the futures contracts. I don't know. I guess not that I wanted to pay $5, but I'd rather pay $5 and know stuff's going to get through the way it's supposed to versus the problems or issues that I think we're going to have in the near future. Yes, they can still make money because loaning the money to the bank or cash on hand, difference between the real interest rate and the Fed interest rate, I think that we're going to run into a problem. We're going to run into problems. I haven't traded Invest Tools, partially because they've had some screw ups. I think it was Options King that also I placed an NVIDIA trade that got filled at Microsoft. I've seen some issues on the smaller brokers like MoneyBlock, and it's mark my word, it's going to lead to some issues. The catch is that they have enough money that's sitting there that giving you an interest rate and having it through the Fed rate still makes them enough money to offset that money. Plus, don't be surprised if you're going to get pushed and get calls to going into more sales calls, pushing you guys into funds. No reason to use the small players with less than ideal service. Just have your accounts at the big houses. Yeah, I agree, but the big houses are no longer going to care about it as much because they don't make anything on it. So it's going to come to a problem. The comments made, competition may keep errors to a minimum. I see where you're going with that, but there is no competition. They're all free now. So mark my words, you're going to have stuff going through and it's going to be ugly. Maybe funds will need to lower their fees or their costs will go down, I presume. Nope, they're going to hide them somewhere else. That's why they call them hidden fees. And they're going to hide more fees to screw you. How about that one? The competition will be the service. I think it'll be fine. I would like to agree with you on that regard, but again, when you've talked to an online broker, I'll be honest with you, a lot of time there will be a lot of time you'll know more than just the hourly broker guy that sits there that answers your questions. I think it's going to suck. I think our service is going to suck. I think you're going to see them go cheap rate on that. I think you're going to have small beginner brokers get into place. It's going to suck. And again, it comes back down to that no free lunch. It's going to suck. So errors or lack thereof will incentivize to change brokers. I'm talking amongst the likes of TD Ameritrade, E-Trade, Charles Schwab. The funny thing is, it'll be their fault, and they will blame it on a clearinghouse, or they'll blame it on a software error. It won't be their fault. And all I'm going to say is I've waited until the 14th and 15th of some months for my management fees from Brokers Express in the past, E-Trade in the past, and you damn well know that it's not a software glitch. It's that they need a certain amount of money to stay in their accounts for bonuses and for assets under management. And again, it's for all intents and purposes, it's bullshit. I'd like to see how they'd like to get paid 2 weeks late. They would scream holy hell. And it's happened a couple times. So, I don't know. Don't be surprised when it's someone else's fault, not theirs. Good question, though. Any other questions you guys have? My whole idea is let's just get through the next week or two and let's get into earnings. Let's get into the companies that we have that we love. I'm so excited to see Disney's earnings. Oh, today I took off Bank of America protection. So today I took off Bank of America protection for a profit, and on long calls, dollar cost average. Now, why would I do that? On Thursday, there will be an announcement on what banks are going to have looser restrictions. Kevin, why didn't you add more shares? I'm waiting a day. I'm waiting a day because tomorrow looks like, with China coming back online, they got to play catch up and tank a little bit. We might have a little bit of pullback in Bank of America tomorrow. Also, as I looked at the extended hours trading on Bank of America, it's actually up 2 pennies. Dang it, it was down a couple cents last time I checked. So I'm just giving this a run. The calls I tried to dollar cost average because they were half of our positions previous. I can add the shares for Bank of America and accounts. I'll just do that tomorrow if I need to. But look for some big banks on Thursday getting a reprieve from their restrictions. We could have a nice run on banks going into this quarter and through the end of the year because they won't have the restrictions. You'll see some things lighten up for them, pay a bigger dividend, get to trade more money or lend more money out. Really, Thursday could be a nice little explosion on some of our banks that'll carry through this quarter and through earnings. I guarantee you'll hear about it on earnings if they're banked qualified for this this lightening of the regulations and restrictions on the banks. That I understood would be coming out on Thursday. All right, and just making a click through. If I have not missed anyone else's comments, guys, have a wonderful evening. Look forward to seeing you tomorrow for the trade findings and adjustments. That should be run by Keeve, as I have a boy going through a soccer and a soccer tournament, another one playing baseball. So guys, take care. Have a wonderful evening, and I look forward to seeing you guys, I guess, Thursday morning. Good night.